focused. Don't talk about what you're gonna do. Don't just dream about what you're gonna do. Don't criticize somebody else for what they're not doing. You be it. Be about it. Be about that action and go do it. Keep your eye on your intention.
When you are struggling and you start thinking about giving up, I want you to remember the power of hope, the belief that something better is always possible if you're willing to work for it and fight for it. Our hope that if we work hard enough and believe in ourselves, then we can be whatever we dream, regardless of the limitations that others may place on us.
If you stay in your comfort zone, that's where you will fail. You will fail in your comfort zone. Success is not a comfortable procedure. It is a very uncomfortable thing to attempt. So you got to get comfortable being uncomfortable if you ever want to be successful.
Excellence is never an accident. It is always the result of high intention, sincere effort, and intelligent execution. It represents the wise choice of many alternatives. Choice, not chance, determines your destiny.
You must know inside, in the deepest part of your being, that you matter. Not just that you matter, but also why. So for me, the foundational base of empowerment, of entrepreneurship, of any kind of engagement, the foundational base of my success, of my well-being, my wholeness, my everything is knowing who I am and where I come from.
Without commitment, you'll never start. But more importantly, without consistency, you'll never finish. Keep working, keep striving, never give up, fall down 7 times, get up 8. Ease is a greater threat to progress than hardship. So keep moving, keep growing, keep learning. See you at work.
I'm often asked, what's your secret to success? The shorter answer, put in that work. There may be more failures than victories. Please don't ever feel entitled to win. Just keep working harder. Surrender to the cards you are dealt. Losing can be the best motivator to get you even bigger wins. So never compare yourself to anyone else.
Welcome to Fundamentals of Finance. I'm going to go ahead and get started with everything for tonight. Here is just a little bit about me. I'm the founder of iTax Solutions and iTax Institute. In 2009, I launched a mobile tax preparation business. To date, that has grown into a seven-figure. In 2019, I founded iTax Institute, and to date, I've trained over 500 entrepreneurs in launching a tax preparation business. I also help entrepreneurs that are in other industries as well. I've earned my bachelor's degree from UTA in 2010. I earned my master's, my MBA in 2012. I received an honorary doctorate in 2023, and I am absolutely dedicated to uplifting others through financial education, business coaching, philanthropy, and much more. So I want you guys to know if you have questions, be sure to just hang on to your questions to the end of the webinar series. And then you can put your questions in the chat and I'll be more than happy to answer those. So what is the Fundamentals of Finance series? So if this is your first time here, the Fundamentals of Finance series is a free webinar series that I designed to educate taxpayers as well as small business owners to navigate essential topics like taxes, business structure, funding, financing, and bookkeeping. I'm sharing what I've learned over 20 years as a business owner and tax professional. If you find this session helpful, please pass it along to a friend or colleague who might find it beneficial too. So who is the Fundamental of Finance series for? This series is for anyone, whether you're a taxpayer or a small business owner, or just someone looking to pick up financial knowledge they didn't teach us in school, but that we all know is essential, especially once we get to adulting. Oh my goodness, so much stuff that I've learned. And I know I'm not the only one. I'm not expecting you to leave these sessions as a tax expert or business funding wizard, but this is more about the core knowledge you need to feel more empowered when it comes to your finances. And if anything is unclear or you have questions, I'm definitely here to help. What should you bring to the Fundamentals of Finance series? It's simple. Just bring something to write with so you can take notes and refer back to them later and come ready to learn with an open mind. We're here to help make things practical and easy to understand. What is the objective of the Fundamentals of Finance series? The objective here is pretty simple: to provide clear, accessible education on topics like taxes, business funding, and investments through a series of webinars. We're going to tackle a range of topics that would be helpful for anyone managing their own finances or running a small business. As the series progresses, I'll also be bringing in guest speakers who are experts in areas beyond my own specialty. So you'll have a chance to hear from other professionals who can offer new perspectives and deeper insights. When is the Fundamentals of Finance series? We're live every other Thursday at 7 p.m. Central Standard Time, so mark your calendar and join us for the next session. If you can't make it to the live webinar, no worries. The replays will be on my YouTube channel, so be sure to subscribe to the YouTube channel so you can stay updated. So here are just a few rules while we're here. Please keep your microphone muted unless you're speaking. Avoid using offensive or discriminatory language. If you have any technical issues, please use the chat to report them. Questions will be answered at the end of the presentation, and be sure to have your notebook ready to take notes. So I'm ready to get started. I hope you guys are ready to get started. This is Series 3, Fundamentals of Finance. It's really kind of a tongue twister sometimes. Tax Essentials Uncovered. Education credits. In this series, what we're going to go over is the education credits, the Affordable Care Act, standard versus itemized deductions. I've noticed that in my time as a tax professional, a lot of people are unfamiliar what the difference is between standard deductions as well as itemized deductions. And also, I'm going to briefly touch on some different tax schedules A through F. So there are so many different tax schedules that can accompany a tax return. So I look forward to covering that with each and every single one of you. So we're going to go ahead and get started with the education credits. Education credits are available for taxpayers who pay expenses for post-secondary education. So that's following high school. So whether that's a junior college, a university, or graduate school, that's what's considered post-secondary education. To claim the education credit, the student must receive Form 1098-T from the student's school and provide that form to the tax preparer to file with Form 1040. Now, of course, if you file your own taxes, you'll also need this form as well to accompany your tax return. Now, there are two education credits that you want to make sure that you are familiar with. The American Opportunity Credit, so that's often referred to as the AOTC for short, and then the Lifetime Learning Credit. So here's Form 1098-T. So if any of you have attended college or you have children or dependents that are in college, right? Or a qualifying educational institution is how the Internal Revenue Services refers to it. Then if tuition was paid out of pocket, then they are going to receive this Form 1098-T, okay? Now, sometimes it used to come in the mail, but now most colleges, what I see is when you are in your portal to like register for your courses for the semester, it's typically like in your student registration portal. So if you are enrolled in college, or if you have children that are enrolled in college and, you're looking for this form, you can always, reference your portal where you actually register for your classes. If you're still unable to find it, I always recommend that you call the financial aid office or call the registrar's office. Some important information that's on this Form 1098-T. You get it, let's see, I think the 1098-T is issued by January 31st. Now, a lot of these colleges do not typically have these ready like at the beginning of January. I usually see them ready around mid-January. The very beginning of January, not a lot of schools have these ready. So typically after around the 15th, you can see these in the portal. And again, this applies if you pay out of pocket for tuition or if you even get student loans. Because technically, even if you get student loans, right, that's still money that is out of your pocket paying for qualified tuition. So box 1 is what's important. That's what's always going to tell you how much was actually paid for tuition out of pocket or either student loans. Box 5 is also important. So if the If the student receives scholarships or grants, that's going to be reported in box 5. Box 8, if the student was at least half-time, so that means basically if they took at least a minimum of 6 hours, then they will, that box will actually be checked. And box 9 will be checked if the student is a graduate student. So if you receive this form, you always want to pay close attention to those boxes to make sure that that information is accurate, okay? And again, that's form 1098T that can be found in the student portal for the individual who is attending college. So once you receive form 1098T, that's actually transferred over to form 8863. A few years ago, I remember there was a lot of like scamming and like craziness going on. Before they didn't require, I guess you could say, the form 1098T. So a lot of, tax professionals and people who are just, making this like a hustle, were just throwing these tuition statements on people's tax returns. So now the IRS, they caught on to it and they're like, hey, you got to have this form. So I just want you guys to know that that's kind of why they kind of cracked down on these kind of things, because people were really taking advantage of it. So once you have the form 1098T, when you're looking at your tax return, you should also see form 8863 to accompany your form 1098T. So on this form, this is where you're going to see which credits you qualify for and the amount that you receive for the credit. So this is form 1098E as in elephant. So if you paid student loans, I know I have so many student loans. Oh my gosh, I don't even want to think about it. But if you paid student loans during the tax year, then what you want to do, whichever lender that you paid that amount to, you can actually go into your portal and you can download this form 1098E. Typically, I see it on the left-hand side, and it'll say like tax information. So this is actually something that you want to make sure that you add to your tax return or make sure that you provide to your tax professional, because this will actually help to reduce your tax liability. So if you're paying student loans, make sure you get that form 1098E. So that sums up things about the education credit. Is quiz time. So make sure y'all are ready in the chat to answer these quiz questions. Quiz question number 1, are y'all ready? What is required to claim an education credit for post-secondary education expenses? A, proof of enrollment from the school. B, form 1098T from an eligible educational institution. C, a copy of the student's diploma. Or D, a copy of the student's school ID. So I'm going to see if I can also see the chat. Okay, I see B in the chat. All right. Okay, let's take a look and see what the correct answer is. The correct answer is B, form 1098T from an eligible educational institution. Yay, congratulations to everybody who got that right. Okay, next question. What tax form does the taxpayer receive from a qualified education institution showing the interest paid for student loans? Form 8863, form 1098T, form 1098E, or form 1095A. So what tax form does the taxpayer receive if they paid student loan interest? Okay, I see A, I see C, I see C. All right, let's take a look at the correct answer. The correct answer is C, form 1098E. So if you paid out student loans during the tax year, you want to make sure that you get that form 1098E and report that on your taxes. Next question. The education credits are calculated on which tax form? Form 8863, form 1098T, form 1098E, or D, form 1095A. I apologize, I should have said the letters. So where is the actual credit calculated? So this is the form that's actually going to accompany your 1040 tax form. So we know 1098T is from the school, 1098E is for student loans. So the answer is A, Form 8863. So that is where that 1098E, I'm sorry, that 1098T is going to actually transfer to is the 8863. So congratulations to everybody who got that right. So briefly, I am going to go a little bit more in depth about each education credit. So first we have the American Opportunity Credit. So taxpayers can claim the American Opportunity Credit for a student who meets all the following requirements. The student has not completed their first 4 years of post-secondary education determined by the eligible post-secondary program. The student has not claimed the American Opportunity or the Hope Scholarship for any prior 4 tax years. So this is really important. I've seen people that tried to claim this credit and didn't realize that they had claimed the credit 4 years prior. So you can only claim this tax credit up to 4 years on your tax return. So let's just say, for instance, myself, my daughter, I had my daughter when I was in college. So when I was in college, I was claiming my Form 1098T. I wasn't a dependent on my parents' tax return. So with that being said, I was only able to claim that credit for 4 years. And after 4 years, I was no longer eligible for the American Opportunity Credit, even though I continued on with my education. So make sure that, you know, your tax professional should be asking you like, hey, if you went to school or if your kid went to school, of course, if your child's a, freshman or a sophomore or something like that in college, they may or may not ask. But technically, as a tax professional, we are supposed to ask you like, hey, what classification, is the student, as well as have these credits been claimed on the tax return for any prior 4 tax years. For at least one academic period beginning in 2024, the student did the following: enrolled in a program that leads to a degree, certificate, or other credential, carried at least one half of the normal full-time workload for their course of study, which is at least 6 hours. The student does not have any federal or state felony conviction for possessing or distributing a controlled substance. So with the American Opportunity Credit, you cannot have a felony. The maximum credit amount for the American Opportunity Credit is $2,500 per eligible student per year for the first 4 years of higher education. So if you have multiple children or multiple dependents that are in college at the same time, and sometimes I've seen taxpayers, the parents as well as the dependents are in school at the same time. So you can get that credit multiple times, right? So just as long as you have that Form 1098T, then you can get that. So it's up to $2,500 per year for the first 4 years of higher education. So while pursuing that bachelor's degree, they can get up to $2,500, okay? Eligible expenses, this credit covers qualified tuition, fees, and course materials. It does not include room and board, transportation, or medical expenses. The refundable portion is up to $1,000 of the AOTC, meaning taxpayers can receive this amount even if they owe no tax. So basically what that means is that if the taxpayer or the dependents have this Form 1098T, the credit is up to $2,500, but the refundable credit, which means the amount that your tax refund can increase, is up to $1,000, okay? So let's just say if they paid, $12,000 in tuition, right? The maximum that you can receive is $1,000 for the credit. So you can get up to an additional $1,000. Your refund can increase by up to $1,000. Eligibility requirements. Qualified education expenses. For purposes of the student loan interest deduction, these expenses are the total cost of attending an eligible educational institution, including graduate school. They include amounts paid for the following items: tuition and fees, room and board, books, supplies, and equipment, and other necessary expenses. The cost of room and board qualifies only to the extent that it is not more than the greater of the allowance for room and board as determined by the eligible educational institution that was included in the cost of attendance for a particular academic period and living arrangement of the student, or the actual amount charged if the student is residing in housing owned or operated by the eligible educational institution. Student status. The student must be enrolled at least half-time in a degree or credential program and cannot have completed the first 4 years of higher education. There are some income limits to being able to claim this credit. Your modified adjusted gross income must be below certain thresholds to claim the full credit. So $80,000 or less for single filers. So if your filing status is single or head of household, you have your modified adjusted gross income has to be $80,000 or less. Married filing joint couples, $160,000. The credit phases out for incomes above these limits with partial credits available for modified adjusted gross income between $80,000 and $90,000. So if a single individual or an individual who's claiming head of household, if they are anywhere between $80,000 and $90,000, that $1,000 credit is going to continue to phase out. And if I'm not mistaken, I think it phases out by $100 for every $1,000. So that gap between $80,000 and $90,000 is $10,000. So for every $1,000, the credit, which is $1,000, phases out by $100. And for married filing joint, it's $160,000 to $180,000. So when claiming the credit, you must complete Form 8863. And if you have a tax professional, that's already included within our professional tax software. So just make sure you provide that form to them, or if you decide that you want, or, if you prepare your own taxes, then just make sure you keep that form, and that software is also going to automatically generate that Form 8863. So calculation, the credit is calculated as 100% of the first $2,000 of qualifying expenses plus 25% of the next $2,000, leading to a maximum of $2,500 per student. That's just how it's actually calculated. But again, the software does all of that, so you don't have to worry about it. Grants and scholarships. If the student receives grants or scholarships, these amounts must be subtracted from the qualified expenses before claiming the AOTC. Now, sometimes what you may come across, there are students who receive a full scholarship, right? So if someone receives a full scholarship and they don't pay anything out of pocket or get any student loans, then you actually cannot claim this credit, because this credit is only if you pay money out of pocket, meaning literally out of pocket or student loans, okay? So if you or your dependent receive this Form 1098-T and box 1 is empty, but box 5 has an amount there, feel free to provide it to your tax professional. But me just knowing what I know and based off my experience, honestly, is not going to do anything to increase the refund amount. And also, I want y'all to make sure, like, especially if you have younger children that are like in college, I've noticed that a lot of tax professionals will prey on children that are in college. And the reason why I say they prey on kids while they're in college, because what they'll tell them is they'll be like, hey, you know what, you got your Form 1098-T, you can, get $1,000, let me file your taxes. And they'll say, oh, okay, I'll charge you $200, or I'll charge you $100 or $250. And, I remember these days being in college and, money looking kind of funny, right? Eating ramen noodles, whatever. So, any little bit counts, but they will come up to your kids and they'll tell your kids like, hey, give me that Form 1098-T. They'll hurry up and file it. And when they file that form, the dependent appears as if they are 100% independent. So once that tax professional, if they get somebody else to file that form who doesn't know that you as a parent are going to claim that child as a dependent on your tax return, what happens is when you get ready to file your taxes that year, and, let's just say I input your information. I'm like, yeah, here's the taxpayer and here's the dependent, here's the 1098-T. The IRS is actually going to reject it and say, well, you know what, this dependent already has a tax return on file with us. And I've had that happen so many times. So I want to just, kind of spread that information and educate you guys. Once your kids go to college, let them know, hey, that you as a parent, you are still filing their taxes, and to make sure that they get that form to you, because what happens, they think it's a quick $1,000, but the reality of it is that I'm the parent, I'm taking care of you. You're calling me every other week for groceries and, books and things and all of this kind of stuff. I'm taking care of you, even if you are no longer in my home. So you want to be able to continue to carry them as a dependent, as well as get that additional credit on your tax return. So make sure that, if you have children that are going to college or that are in college, make sure you guys talk to them about that. Because like I said, and it's a headache. It is an absolute headache to get that error fixed. Maybe I shouldn't say headache. It's very time consuming. And most taxpayers get extremely frustrated because now as a parent, your refund amount is probably going to differ anywhere from, I've seen it maybe anywhere from $3,000 to about $6,000 because your kid wants to go get, a quick $1,000 that you take care of, right? I don't know about y'all, but I'm a college mom at this point and very, very frustrating. So saw it from a tax perspective and now looking at it from a college mom perspective, I'm like, yeah, don't do that. So just wanted to put that bug in y'all's ear. So we're going to move forward. If you're eligible to claim the lifetime learning credit and are also eligible to claim the American Opportunity Credit for the same student in the same year, you can only choose to claim either credit. So as a tax professional, when I see that you qualify for both credits, I'm actually going to go with the credit that's going to get you back the most amount of money. So you can't claim the AOTC if you are a non-resident alien for any part of the tax year unless you elect to be treated as a resident alien for federal tax purposes. The law requires that both you and your qualifying student have a valid Social Security number or ITIN issued before the due date for your tax return in order to claim the AOTC. So let's get ready for quiz time. Y'all get ready in the chat, We have a couple questions. Let's see who's going to get these right. So question number 1, the students must be enrolled at least blank to be eligible for the education credits. A, full-time, B, half-time, C, 4 months, or D, the whole school year. Okay, I see B in the chat. B, okay, all right, let's take a look. The answer is B. Congratulations, halftime. That is correct. They must be enrolled at least halftime in order to receive these credits. What is the maximum refundable amount for the American Opportunity Tax Credit? A, $1,500, B, $2,000, C, $2,500, or D, $1,000? I see D in the chat. What is the maximum refundable amount for the American Opportunity Tax Credit? I see B in the chat. I see C in the chat. The American Opportunity Credit is C, $2,500. So remember, the American Opportunity is $2,500. It's more than the Lifetime Learning Credit. So we'll go ahead and get into the details of the Lifetime Learning Credit. The Lifetime Learning Credit is available at any time for the taxpayer's spouse, or the taxpayer's dependent. The maximum allowed credit is $2,000 or 20% of the first $10,000 of qualified tuition and related expenses paid for all students during the year in which the taxpayer claimed them on the same tax return. Qualified expenses include tuition and fees required for enrollment at an eligible post-secondary program. So again, the tax software will calculate that. So it will just kind of let you know exactly what amount you qualify for. Qualified education expenses. The Lifetime Learning Credit covers tuition and mandatory fees for post-secondary education, including undergraduate, graduate, and professional degree courses, as well as courses aimed at acquiring or improving job skills. So again, it's called the Lifetime Learning Credit. So it extends to graduate and professional degree program, so post-secondary. So after you finish your bachelor's degree, then this is what the lifetime learning credit, this is when it kicks in. Enrollment. The student must be enrolled in an eligible educational institution for at least one complete academic period during the year. So even if the student only attends for one semester or one quarter or something of that sort, then they still qualify. Okay, so they don't have to go the entire tax year. I hear a lot of people say that. I'll ask them, I'll say, okay, well, you know, I'll see the age of their kid, or they'll say, yeah, I went to school, but for not very long. I didn't go the whole year. And I'm like, well, even if you didn't go the entire year, a semester or trimester or quarter does count, you know, as you being enrolled, as long as it was for one complete semester, trimester, or quarter. Dependency status, the taxpayer claiming the lifetime learning credit cannot be listed as a dependent on someone else's tax return. However, parents can claim the credit on behalf of their dependent children. So that kind of goes back to the dependent. The dependent, even if they worked a little bit, they can have their own tax return, but there is a box that must be checked on the dependent's tax return that indicates that they can be claimed as a dependent on someone else's tax return. So it's important to make sure that that is indicated. Income limits to claim the full credit, pretty much the same as the AOTC, 80,000 or less for single married filing joint, 160,000 or less for married filing joint couples. The phase out is again the same, 80,000 to 90,000 for single and head of household, and 160 to 180 for joint filers. Claiming the credit, only one lifetime learning opportunity, I don't know why I keep getting tongue-tied. Only one lifetime learning credit can be claimed per tax return, regardless of the number of eligible students in the household. The credit is not refundable, meaning it can only reduce the tax liability and not result in a refund. Income limits for claiming the lifetime learning credit, again, 80,000 for single filers or head of household, 160 for married couples filing joint. Taxpayers can get the full credit if their AGI is less than those amounts. Again, the phase out is 80 to 90 and 160 to 180. So here are some of the key differences from the American Opportunity Credit and the Lifetime Learning Credit. The Lifetime Learning Credit is available for an unlimited number of years, unlike the AOTC, which is limited to the first 4 years of undergraduate education. The Lifetime Learning Credit can be claimed for both undergraduate and graduate courses, whereas the AOTC is restricted to undergraduate studies only. The lifetime learning credit allows for more flexibility in terms of course types and does not require at least half-time enrollment. So let's get ready for quiz time. What is the maximum allowed lifetime learning credit for qualified tuition and related expenses? A, 1,000, B, 2,000, C, 3,000, or D, 4,000? What is the maximum allowed lifetime learning credit for qualified tuition and related expenses? Okay, let's see what we have in the chat. I see B in the chat. Okay, the answer is B, correct, $2,000. Next question we have, which of the following statements are true regarding the lifetime learning credit? The lifetime learning credit covers only tuition for graduate level courses. B, to qualify, a student must be enrolled for at least one complete academic period during the tax year. C, only students who are not dependents can claim the lifetime learning credit. Or D, the lifetime learning credit only applies to students attending public colleges or universities. So again, the question is, which of the following statements are true regarding the lifetime learning credit? Take a stab at it. Okay, I see A in the chat. Anybody else? Which of the following statements are true regarding the lifetime learning credit? I see C in the chat as well. The answer is B. To qualify, a student must be enrolled for at least one complete academic period during the tax year. Next question, is the lifetime learning credit non-refundable? True or false? The lifetime learning credit, is it non-refundable? True or false? The answer is true. It is non-refundable. Next, we are going to get to some brief tips on maximizing education credits. So one, understanding eligibility, be sure to familiarize yourself with the eligibility requirements for both credits. The AOTC is available for the first 4 years of higher education, while the lifetime learning credit can be claimed for an unlimited number of years, covering both undergraduate and graduate courses. 2, claiming the right credit. You cannot claim both credits for the same student in the same tax year. You want to make sure you assess which credit offers the most benefit and reduces your tax liability the most, okay? There are some income considerations. Again, we went over the modified adjusted gross income for both credits. In order to receive the maximum, you have to be, if your filing status is single or head of household, under 80,000, married filing joint, 160,000. Be sure to document educational expenses. The IRS hired all of these people, y'all, and again, they are really doing their jobs. So your tax professional should be asking you for that Form 1098-T, as well as I've seen some IRS agents, they're like, yeah, you know, we need the receipt for the tuition, right? They want to see the receipt for the tuitions or see something showing that the student registered for their classes, right? So your tax professional should be asking for the 1098-T, because sometimes people, they have fake documents, right? So, and I'm telling you that as a tax professional, because people want, this extra money, right? So that is why the IRS is like, hey, as a tax professional, you need to be asking for these additional documentation. So don't be surprised if your tax professional asks you for a schedule or some type of receipt or something like that. And again, it's something that you can access in the student's portal. Strategic allocation of scholarships. If you receive scholarships or grants, consider how they are allocated. In some cases, including a portion of scholarships and gross income can maximize your education credits. This strategy may allow you to retain qualified education expenses for credit calculations. Be sure to provide that Form 1098-T to your tax professional. Consider student loan interest deduction. Again, if you paid student loans out of your pocket during the tax year, make sure you go and get that Form 1098-E and provide that to your tax professional and get that tax deduction, okay? If you have multiple students, you can claim the AOTC for each eligible student, while with the lifetime learning credit, it can be claimed for other students' expenses up to $10,000 in qualified expenses per tax return. Be sure, if you have any questions, to consult with a tax professional. iTax Solutions, we do offer free tax quotes. So if you're interested in a free tax quote, you can always click on the link, upload your information. There's no obligation. I'll take a look at your information and let you know, what type of refund amount you're looking at, or if you owe taxes. And then at that time, we also discuss your tax preparation fees, and you can always decide whether you want to work with us or not. Again, there's no obligation. So I'm just kind of throwing that out there. If you guys are interested, here is just a brief comparison of the AOTC as well as the lifetime learning credit. It's just in a table format. So let's get ready for quiz time. All right, let's go. Question number 1, if you have multiple eligible students in your household, can you claim the American Opportunity Credit for each student? A, yes, but for only up to 2 students. B, no, only one AOTC claim is allowed per tax return. C, yes, you can claim the AOTC for each eligible student. Or D, no, the AOTC cannot be claimed for any student if there are multiple students. So if you have multiple eligible students in your household, can you claim the AOTC for each student? I see C in the chat, and that is absolutely correct. Yes, you can claim the AOTC for each eligible student. Question number 2, how long can you claim the AOTC compared to the lifetime learning credit? A, AOTC for 4 years, lifetime learning credit for 4 years. AOTC for 4 years, lifetime learning credit for unlimited years. C, AOTC for unlimited years or lifetime learning credit for 4 years. Or D, both can be claimed for unlimited years. I see B, I see C in the chat. So we have the lifetime learning credit. So remember, lifetime learning credit is unlimited. So the answer is B. The AOTC is for 4 years, which is more focused on the undergraduate education. And then the lifetime learning credit is for unlimited. So post secondary, so like graduate school and other professional degrees. Next question, what is the limit on the modified adjusted gross income for single or head of household or qualifying widower filing status? So the limit that they can actually receive the full credit. I know we went over that multiple times, so y'all should be familiar with that number. A, 80,000, B, 90,000, C, 100,000, or D, 110,000. I see A up and down the chat. Let's see if that is the right answer. B, 90,000. Actually, you know what? Let me see. What is the limit on the Okay, y'all are right. Technically it is 80 to get the full credit. So I probably should have been a little bit more detailed with this question, but y'all did get it right. The answer is A. Okay, so next we have the Affordable Care Act. I'm not sure if you guys remember, but a few years ago, this was kind of modified around COVID, but I'm going to touch on it briefly. The Affordable Care Act contains comprehensive health insurance reforms and includes tax provisions that affect individuals, families, businesses, insurers, tax-exempt organizations, and government entities. Healthcare information forms. Taxpayers who are preparing to file their tax returns may receive multiple healthcare information forms that they can use to complete their tax return. So if you received healthcare during the tax year, you're going to receive one of these 3 forms, either 1095A as in Apple for health insurance marketplace. That's the health insurance marketplace statement. So that is if you received health insurance through the marketplace, right? Or the healthcare.gov or Obamacare, right? Form 1095B as in boy, that's just for health coverage. Form 1095C is for employer provided health insurance offering coverage. So if you got insurance through your employer, then you're going to get Form 1095C, okay? So health insurance marketplace. If you purchase coverage through the marketplace, you may be eligible for the premium tax credit. So you'll receive Form 1095A health insurance marketplace statement at the beginning of the tax filing season. If you set up a healthcare.gov account online, you can get a copy of your Form 1095A through your marketplace online account. And again, that's healthcare.gov. I meet a lot of individuals and I come across a lot of clients or potential clients who do not have healthcare insurance. So if you know anyone who does not maybe qualify for like Medicaid or CHIPS, I mean, y'all, the way that inflation is right now, it's crazy, but it's very important to make sure that we have proper healthcare. So healthcare.gov is absolutely amazing. And if it's too expensive for you to go through your employer, y'all check this out. Seriously, I promise you it's really, really good. I actually have healthcare through the marketplace. I have it for myself and my daughter, and I pay for it every single month. They deduct it out of my account. You go in there, you put your information in. They give you all of these different plans, and they ask you if you want to add dependents or like a spouse, and you can choose from all these different plans, choose what your deductible is, all of that good stuff, right? So if you are self-employed, this is also very good as well. So that's the reason why I have marketplace insurance, because it works out better for me to do that. Even as a business owner, I will say this, whether I personally am paying for it out of my pocket or the business is paying for it, either way, it's a tax deduction, okay? And that's also because my daughter is an employee of my company, all right? So make sure you check out the marketplace. Now, this form 1095A, this is what you're going to get if you receive marketplace insurance. Now, I saw this a lot this most recent tax season. There were people who we would file their tax return and the IRS would reject the tax return. And so basically, when the IRS rejects the tax return, they're saying, hey, based on this social security number, we're showing that this person had marketplace insurance. And what we were finding out is that randomly a lot of people were just, I don't know, I guess people were signing people up for marketplace insurance and they didn't know, because we would reach out to our clients and we're like, hey, we got a reject code, it's saying that you have marketplace insurance, and they're like, no, never had it, not sure, that kind of thing. So if your tax return rejects, it's a possibility somebody could have applied for marketplace insurance on your behalf. And I will say this, we still have to have that form, because without that form, the tax return won't go through. And for some people, they may say, oh no, don't worry about it. Don't worry about it. If this information is left off of your tax return, it will absolutely take forever and a day for them to fund your tax return. Actually, as a matter of fact, it's going to actually just get held up. They're not going to fund it, because they're going to say, hey, we're supposed to have this form 1095A. So in the event that happens, we always just ask our clients, hey, call the marketplace or log on into your online account. And if for some reason you do find out that there is some type of fraudulent activity, the marketplace will guide you through the steps to get that taken care of. But this is what the form looks like. And in the event that you receive this, it'll basically just have your information at the top. If you have dependents that are covered as well, or a spouse, and then here it will list the amounts of the premiums that were paid. This is from 1095B. This is received if you have insurance through your employer. Okay. Now, this honestly is not relevant to filing your taxes. I receive this form a lot, and there's nothing wrong with that. But if you receive this, honestly, in all actuality, the 1095A, as of now, is the only thing that is actually relevant when it comes to filing your taxes for tax purposes. So I'm sorry, this is form 1095C. This is also from the employer. It just kind of breaks down how much was taken out of your paycheck for your coverage. So here, this is what the healthcare.gov website looks like. It's really simple to navigate. Everything is there that you need. If you want to see if you qualify, if you want to get coverage, or if you need to update anything. This 1095A form, if you receive marketplace insurance, has to be out by January 31st of every single year. Also the 1095B and 1095C as well. So let's get ready for time briefly. Let's go. Quiz question number 1. What form should you receive if you purchase healthcare insurance through the health insurance marketplace? A, form 1095B, health coverage. B, form 1095C, employer provided insurance offer and coverage. C, form 1095A, health insurance marketplace statement. Or D, form 1040 U.S. individual tax return. So if you got health insurance through the marketplace, I see C in the chat, you're going to get form 1095A, health insurance marketplace statement. If a taxpayer has marketplace insurance but didn't receive form 1095A, which agency should they contact? A, the IRS, B, healthcare.gov, C, the Social Security Administration, or D, the Department of Health and Human Services. So if you receive marketplace insurance, who should you contact if you do not receive that form? The answer is B, healthcare.gov. And on their website, they have a phone number, and I think they have a chat option as well. How can taxpayers access Form 1095A? A, through healthcare.gov customer portal, B, by calling customer service, C, through the mailbox, or D, all of the above. How can taxpayers access Form 1095A? D, all of the above. So what I've seen in the past, sometimes people are unable to log into their online portal. And of course, they're ready to file their taxes, so they can't wait for the form. A lot of times what the customer service reps will do is they will actually give the taxpayer the amounts that are in each like column and each line item. So in the event that you're unable to access that, that is how you do it. You can give them a call. They'll go through each and every single column, each and every single line item. I know it can be time consuming, but it's important to have this when you are filing your taxes. So let's talk about the standard deduction versus the itemized deduction. I get this so much. So I want to make sure that people clearly understand what the difference of the standard deduction is. So be sure if you guys have any questions or anything is unclear to write your question down, and I'll be sure to answer it in the chat at the end. Also, be sure to stay tuned. At the end, I'm going to have a survey. And once you complete the survey tomorrow, we will actually have a drawing, and a lucky participant will receive a gift card. So, standard deduction, let's get into it. The standard deduction is a specific dollar amount that reduces the amount of taxable income. The standard deduction consists of the sum of the basic standard deduction and any additional standard deduction amounts for age and/or blindness. In general, the IRS adjusts the standard deduction each year for inflation. So we've seen this go up every single year. It varies by the filing status, and it also depends on whether the taxpayer is 65 or older, and also if they're blind. Also, if they can be claimed as a dependent. So taxpayers cannot take the standard deduction if they itemize. So when you file your taxes, either you can take the standard deduction or you can itemize your deductions. So for 2023, I just kind of want to show you guys the standard deduction for 2023 versus 2024. It shows you, just based on inflation, how this is increased. For single filers for 2024, that standard deduction amount is $14,600. It's also the same for the filing status married filing separately. So if your filing status is single or married filing separately, $14,600 is your standard deduction amount. If your filing status is head of household in 2024, your standard deduction amount is $21,900. If your filing status is married filing jointly in 2024, your standard deduction amount is $29,200. Okay, this is really important. I'm not sure if you guys have seen those videos where people are like, hey, hire your kid and pay them $12,000 a year, which is around $1,000 a month. Well, in all actuality, right? So I actually do a presentation on hiring your children. And of course, I have my daughter who is in my business, right? So basically, when they say $12,000, let me just tell y'all right now, they don't know what the heck they're talking about, okay? Whatever the standard deduction amount is for the tax year, that is actually the maximum that you can pay your child in that tax year. So if you're a business owner and you are employing your children with your business, right? This is the maximum for 2024 that you can pay them. Now, I know it's something totally different, but you can pay your kid up to $14,600 in 2024. In 2023, you could pay your child up to $13,850 before they have to file a tax return. So that's basically what that means, right? If the kid makes over $14,600, that's including the pay from your business as well as any side jobs or anything like that they may have, then at that point, they'll need to file their own tax return. But as a business owner, as a parent, if you want to employ your children, you can pay them up to this standard deduction for a single individual every single year. All right. So y'all be sure to take note of that, business owners who want to hire your children. Here is Form 1040. This is for 2023. I don't think the 2024 is out quite yet because they can very well make adjustments. We're only in the month of October, so they still have time. This is actually reported on line 12. You will also see that on the side right here where it says standard deduction for, you can always, that will always tell you what the standard deduction is for that particular tax year, okay? So it'll have the filing status and then the amount. So you see this is 2023, it has single and it has 13,000, is it 13,500, 13,600? I can't tell. 13,850. So that's what it has there, right? So you can always tell exactly what that is. And if the taxpayer decided to itemize, or if everything that you have is over this amount for the standard deduction. So let's just say if you're a single individual and your itemized deductions total over more than 14,600, it's going to automatically kick you into itemizing your deductions, okay? And that's going to be reported on Schedule A. And I'm going to show you exactly what is included with those itemized deductions so you can know exactly what I'm talking about, the amounts that have to total up to be more than that standard deduction amount, okay? So some taxpayers choose to itemize their deductions if their allowable itemized deductions total is greater than the standard deduction amount. So again, if you're single, if it's over 14,600 for 2024, then you would itemize. Other taxpayers must itemize because they aren't entitled to use the standard deductions. So taxpayers who must itemize, if you're filing as married filing separately and your spouse itemizes, you automatically have to. If an individual who's a non-resident alien or dual status alien during the year, you have to itemize. An individual who files a return for a period of less than 12 months due to a change in his or her annual accounting period, not very common, an estate or trust, common trust fund, or partnership. So it's quiz time. Let's get into this quiz really, really quickly. What is the standard deduction for 2024 for single and married filing separately? A, 13,600, B, 14,000, C, 14,600, or D, 15,500. Again, for 2024, what is the standard deduction for single and married filing separately? And again, single and married filing separately is always going to be the same amount, okay? So that's how I remember it when I'm preparing taxes. I'm like, okay, if I know that amount, I'll know the other amounts as well. So if you answered C, 14,600, that is correct. So again, if you hire your children and you pay them from your business in 2024, you can pay them up to 14,600. So if that's not something that you're doing right now, you want to start your business in 2025, or if your business is already started and you want to start paying your kid in 2025, all you have to do is Google that amount. It's usually on the IRS website as well. What is the standard deduction for 2024 for the head of household filing status? Is it $12,000? A, B, 21,900, C, 14,000, or D, 15,400? So I recall that the filing status head of household standard deduction is more than the single standard deduction. So definitely not A, definitely not C. So we're down to B or D. So if you answered B, 21,900, then that is absolutely correct. So let's take a look at these tax schedules. And again, if y'all have any questions or need any clarification on the itemized versus the standard deduction, then let me know. Once we get through this Schedule A, if you have any questions, I'm hoping that the detailed information that I'm going to provide about Schedule A help you, okay? So this, again, Schedule A, this is where the itemized deductions are calculated. So all of these things that are on this Schedule A, it's what needs to equal up to be more than that standard deduction amount. So for a single individual, 2024, with the standard deduction amount being 14,600, these itemized deductions have to equal up to more than 14,600 to itemize, okay? So if you itemize, you can deduct a part of your medical and dental expenses and amounts you paid for certain taxes, interest, contributions, and other expenses. You can also deduct certain casualty and theft losses. So here's Schedule A, that is an attachment to your Form 1040. This is your itemized deductions, okay? So whatever, again, these amounts are, you total these amounts up. Actually, the software will do it, but if they are more than the standard deduction, then you're going to pretty much automatically itemize. So your medical and dental expenses, right? If you went to the doctor, you paid for your out-of-pocket costs. What is that? Your co-pays. Yeah, the co-pays, our prescriptions, x-rays. You can deduct the mileage. There is a complete, what is the word that I'm looking for? It is a complete, what does the IRS call it? It's a whole bunch of information on the IRS website. I'm really just kind of drawing a blank right now, but they have a whole thing over what qualifies, right? There are so many different medical and dental expenses that qualify, especially stuff for like medical. Not a lot of cosmetic things, but there are a lot more things that are qualifying in this day and age for medical expenses than it was like 5 or 10 years ago. So you want to make sure that if you paid for medical and dental expenses, braces for your kids, and also y'all, I want to let you know, a lot of people don't know this. I have a lot of taxpayers who may not actually be claiming their dependent on their tax return, but guess what? If you paid those expenses out of your pocket, so let's just say maybe if you're a non-custodial parent and you are paying for maybe like the braces for your child, but they live with the custodial parent and the custodial parent is claiming them on their tax return, if as long as you have those receipts and you're showing that you're paying those expenses for your dependent, even if you're not claiming them on your tax return, you can still write those off, right? If you have a parent and you're paying for your parents like prescriptions and glasses or whatever the case may be, right? You can still actually write this stuff off. Taxes you paid, right? Also, your mileage. Keep up with your mileage for your medical, dental expenses. So back and forth to the dentist, back and forth to the medical doctor, back and forth to get your prescriptions from Walgreens or CVS or your local pharmacy. In order to keep up with your prescriptions, a lot of my clients, what they do is they just go to Walgreens or CVS at the end of the year, and you can actually ask them for a statement to show you everything that you paid for the tax year. So next, taxes you paid. A lot of times people will pay, what is it? Real estate taxes, okay? So that's reported on Form 1098. If you have a mortgage, you'll get that Form 1098. That's really important. So that's included in that. Interest that you paid for your, that's also on your Form 1098. Let's see, gifts to charity. If you are donating to a nonprofit or to your church or your faith, you know, whatever, then you can actually deduct that as well. So a lot of times at the end of the year, your nonprofit will send you like a statement saying, hey, this is what you donated. Also, make sure, y'all, it is currently October. Make sure that you get your donations in before the end of the year, right? If it's time for you to clean out your closet or throw away some things, make sure that you take that stuff over to Goodwill, Salvation Army, or whatever is in your area, wherever you want to donate it. I'm actually in the DFW area and I found this place. I love it so much because they actually, like, you text them and they will literally come to your house and pick it up. So, and they'll leave you like the document saying, hey, like, this is what you donated. So you just want to make sure you keep that. So if you haven't already donated this year, y'all, make sure you donate and keep that, that little slip for proof that you donated. All right. So it's not too late to do that. You have until December 31st. Also, casualty and theft losses. So at the bottom, it'll basically total up these itemized deductions. And again, if it's over that standard deduction amount, then you'll just automatically itemize. And when you itemize your deductions, it actually will reduce your tax liability. So again, this is just a brief overview of the things that you can itemize, all right? gifts to charity, all of that good stuff. I went over that. Schedule B. So Schedule B is for interest and ordinary dividends. You'll use Schedule B to report any of the following. If you had over $1,500 of taxable income or ordinary dividends, you received interest from a seller finance mortgage, and the buyer used the property as a personal residence. You have accrued interest from a bond. You're reporting original issue discount in an amount less than the amount shown on Form 1099 OID. So where I mainly see this is if individuals are getting a Form 1099 INT, and that's for interest or dividends. So most people typically get this from like your stocks. Like I've seen it, or maybe like if your bank pays you out interest for a certain type of account or something like that that you have, savings bonds. So if you have interest or dividends that you're receiving, you want to make sure that you get that information to your tax professional. This is the form that it translates over to, Schedule B. So I just want you guys to be familiar with these forms when you provide this documentation to your tax professional, because I see so many people, they really don't know how to interpret what's on their tax return. And I'm really big on education, especially if you're a new client of mine. I'm like, hey, let me take a look at your prior year tax return. Let's see what the person was doing before. And if I see any funny business, I'm always going to let you know. Or if I see something, or you tell me like, hey, I have this, there could be something that is missing as well. So this is the Form 1099 INT. If you know you received any type of interest or dividends from your financial institution, you can always call them to get that form. So there's also a Form 1099 DIV. So it's 1099 INT and 1099 DIV. So Schedule C. You use this is the profit or loss from business. So you use this if you operated a business as a sole proprietor. You would also say as a limited liability company. I usually recommend that you stick with the Schedule C until your business grosses over 50,000. At that point, you definitely want to make sure you talk to a tax professional and see about getting your business converted over to an S corporation for tax purposes. You'll save a lot more money, trust me. Schedule C, this is the profit or loss from business. This is what it looks like. It basically just gives, the business name, there's a code, the business address, it asks about the accounting method, it asks some questions. It'll ask you about, or it'll report the gross receipts, or sales, which is how much the business actually earned. Okay, so if you have $5,000 worth of sales, then that has to be reported on this form. Part 2 actually are your expenses, right? So if you paid for, I don't know, supplies for your business, your cell phone bill, if you have the type of business where you need to drive your car, right? Your car insurance is actually deductible. You want to keep up with your mileage, right? You want to, if you're working from home, right? I deduct my internet bill. I work 100% remotely from home to operate my business. Also, I have, a business cell phone. I have my personal cell phone as well, but I have a line that is completely dedicated to business. So I deduct that. Anything that I pay for any contract labor or the salary that my team receives, any travel expenses that I have when I attend any type of conferences, whether it's a flight, registration for the conference, my food, advertising, right? We're business owners, so we have to reinvest in our business, right? A lot of people don't understand. Everybody wants to make money, but a lot of people do not want to reinvest that money into their business, okay? So make sure that you keep up with that advertising expense as well. I know when I started out, even though I was in the tax industry, I didn't pay for QuickBooks initially, okay? I was literally balling on a budget. I had a free Excel spreadsheet, and I was keeping up with my expenses that way. So if you are a business owner and, QuickBooks is not in your budget, honestly, I feel like I tell business owners all the time, until you are over that, $250,000 or $500,000 threshold, I would highly suggest that you do your own bookkeeping. And the reason being is because I know for myself, I want to know where every single red penny is going towards with my business. I don't care how much money I make. My team will tell you if we have some subscriptions that need to be canceled, I'm going to cancel it. If they have a free version, we're signing up for the free version. And here just recently, we went through, our bank statements, and I was like, wait a second, we're paying for this. We're paying for this. We don't need this. Cancel, cancel, cancel. Let's downgrade this, right? So you want to know where every single penny is going. Some people, when I talk to them about their business, I'm like, so how much business, how much money did your business gross? And they're like, around this much, right? You want to make sure you know exactly how much money your business is earning. Okay. So keep up with your stuff. And guess what, y'all? I promise you, nobody else is going to keep up with your money better than you, right? Who's currently monitoring your checking account? You, right? You check your checking account. So why would you not take that same energy and monitor your business account? This is the second page of Schedule C. This just asks about, or this just reports like the mileage and cost of goods sold in part 3. So if you're selling goods and you have inventory, then you track that right there. So you just provide that information to your tax professional and they will report it where it needs to be. So forms 1099 NEC, non-employment compensation. So typically where I see people receive this form is if maybe they're contracting. I see a lot of nurses, just if people are basically getting contracted, I see this all the time. Now, when you receive this form 1099, right, that means that no taxes are being withheld. All right. So you want to keep that in mind. So if you are mainly a 1099, if you're mainly a 1099 contractor, you want to make sure that you always kind of have a little stash put away for taxes, just in case. It also depends on a few other factors, whether you have, dependents, your filing status, how much that 1099 is as well. But when you receive that form 1099 NEC, there are no taxes withheld from it versus when you receive a W-2, Uncle Sam, they take out their money unless you go exempt. Form 1099-K, if you are receiving payments from your clients for your sales or for your services through a third party like Square or Stripe or PayPal or any of those things, right? They'll send you this form 1099-K. So if you're accepting those payments, make sure that you log into those accounts and provide that information to your tax professional because that is considered your income on your Schedule C. Schedule D, this is capital gains and losses. This is basically with the sale or exchange of capital assets not reported on any other schedule. So in short, like for instance, if you have stocks and you purchase these stocks and then you decide that you want to sell these stocks, you actually have to report that information on your tax return. Okay. So if you buy and sell your stocks, then you have to do that. All right. Sometimes you receive a gain, sometimes you receive a loss. So it's important that that is reported on Schedule D. And that's just what Schedule D looks like. Sometimes you will receive this form 1099-B. A lot of times, what is it? Charles Schwab, Robinhood, a lot of these things will come in all of these pages, and I'll get all of these pages, like 30 or 40 pages worth of this information. So you want to make sure that if you are buying and selling your stocks, you want to make sure that you consult with a tax professional and make sure that this is reported accurately. Because if it's not, the IRS will come back a year or two later and they'll say, wait a minute, you didn't report this gain. They're not going to tell you that you forgot to report a loss, but they're going to say, hey, you didn't report this gain because, of course, when you sold the stocks and you made the money, the company has to report that to the IRS. So they already have it. So if you don't report it, it's going to come back to bite you in the you-know-what. Schedule E, supplemental income and loss. This is typically for individuals who have rental properties, okay? So if you're renting out, any real estate properties, whether it's single family, multifamily, commercial, Airbnb, If you receive any royalties, right, this is all going to be reported here. So if you are doing like a rental property, just like the Schedule C, you can write off those expenses as well. So your tax professional should be asking you, hey, how much did you pay for, you know, I don't know, if you pay a property manager or if you had to get some things fixed, right? You want to make sure that you report all of your rent that you received for that property, and then you can also deduct those expenses as well. This is page 2 of the Schedule E. Next, we have Schedule F. So in the event that you are a farmer or a landowner, you are going to report this information on Schedule F. So I know that here recently, I see a lot of stuff on social media. So you want to make sure that, you know, you're not having like a random Schedule F on your tax return and you're receiving like a $50,000 tax refund. Okay. So I saw a lot of that this most recent, the last 2 tax seasons, I've seen that. So, you know, people will pop up and they're like, wait a second, or, you know, I had somebody send me their tax return and they're like, yeah, I want you to file my taxes. I'm like, okay, great. Send me over a copy of your tax return. And so I looked at it and I was like, whoa, I was like, this refund amount is kind of high. I'm like, what, you know, what's going on? And so I started going through each page by page. And so what I realized is that they had a Schedule F on there. And I was like, hey, I was like, do you farm? And they were like, no, we don't have a farm. And I was like, okay. I was like, well, I just want to let you know that your tax return shows that you have a farm. So make sure you pay very, very close attention when you're getting your taxes prepared by individuals, and to make sure that, you know, everything is reported accurately. Now, in the event that you do have a farm, though, you should definitely report that. It's just like a Schedule C. You know, you can report the sale and purchase of livestock, produce, grains, agricultural stuff, all of that, as well as your expenses for operating your farm. So that's what page 2 looks like. So quiz time on the schedules. We are almost done here for tonight. So let's see how you guys do on the final quiz. So question number 1, where are the itemized deductions reported? A, Schedule A, B, Schedule B, C, Schedule C, or D, Schedule D? Put in the chat, where are the itemized deductions reported? On which schedule are they reported? Okay, the answer is Schedule A. The itemized deductions are reported on Schedule A. Next question, what schedule is interest and ordinary dividends reported on? A, Schedule A, B, Schedule B, C, Schedule C, or D, Schedule D? What schedule is the interest and ordinary dividends reported on? Okay, the answer is Schedule B. So if you answered B, Schedule B, that is absolutely correct. Yay. Question number 3, what schedule is profit and loss for business reported on? Is it Schedule A, Schedule B, Schedule C, or Schedule D? Profit or loss from business. So if you drive for Uber, if you have some type of side hustle, if you are doing, I don't know, maybe event planning, or you're cleaning, or you're offering tutoring services, right? This is a schedule that you use to report this. So everyone who reports their business profit or loss on a Schedule C does not necessarily have like an EIN number or an official business name, or they may not be registered with the state. But what I do highly recommend is, if you don't, is to get your LLC and to get registered with the state. Get your EIN number so your business can be legit. So the answer to that question is C, Schedule C. Next, what schedule is capital gains and losses reported on? Is it Schedule A, Schedule B, Schedule C, or Schedule D? See what we have in the chat. Capital gains and losses. Okay, I see some D, I see some C. Capital gains and losses are reported on Schedule D. Next, what schedule is profit and loss from farming reported on? Schedule A, Schedule C, B, Schedule D, C, Schedule E, or D, Schedule F? Farming. So which schedule is farming reported on? I remember that because the schedule starts with the same letter as farming. So farming is actually reported on Schedule F. So that concludes everything for tonight, Series 3 of Fundamentals of Finance. So if you guys have questions, be sure to put your questions in the chat, and I'm going to read your questions, and I'm going to do my best to answer them to the best of my ability. So if you have questions about the education credits, if you have questions about the schedules, if you have questions about the itemized deductions or the standard deduction, be sure to put those questions in the chat. If you don't have any questions, that means hopefully I was very thorough and you got your quiz questions correct, and you are more familiar about education credits, itemized deductions, standard deductions, the Affordable Care Act, as well as Schedules A through F. All right, I'm going to wait a couple more moments for any questions. Like I said, be sure to type those questions in the chat and I will get those answered for you as quickly as possible. Okay, so we're going to go ahead and move forward. Here is the QR code for my link tree. If you have questions, maybe regarding your current tax situation for 2024, or if you have questions about your tax situation from a prior year, or if you have questions about this upcoming tax season, I do offer free 15-minute consultations. You can scan this code, schedule your free 15-minute consultation, and you can get your questions answered. We are getting registration, or we also, registration is open. I'm sorry, I'm getting a little tongue-tied. Registration is open for the Fundamental of Finance Series 4. So that is going to take place on October 24th at 7:00 p.m. Also, if you want to get more information about business grants, okay, you can always scan that code, click on that link about business grants. If you're interested in receiving a free quote from me for this upcoming tax season, you can click on join the 2025 tax prep client waitlist. We'll save your information. And when we open up for new clients for 2024, then we'll send you an email or a text message about that. So be sure to scan that. Lastly, I would love to hear your feedback about tonight's Fundamental of Finance Series 3. Be sure to scan this. Tomorrow, we're going to have a drawing for the winner. So thank you to everyone who stayed. I hope you guys learned something. I appreciate your honest feedback, okay? Also, if there are some topics that you want me to cover, be sure to write that down, okay? Let me know what you want to hear about. I know that next Fundamentals of Finance series, I'm actually going to finalize the topic tomorrow. I'm kind of between like exactly what I want to do. So tell me what you guys want to know more about, how you felt about tonight's information, and if there's anything that I can do to do better or anything like that, right? So just give me your honest feedback. I really, really do appreciate it. Scan this code for the survey. And thank you guys so much. I'll see you at the next Fundamentals of Finance free webinar series, which is going to take place again on October 24th at 7 p.m. Central. If you are late or if you want to share this information with a friend or family member, guys, be sure to subscribe to the YouTube channel. The replays will be uploaded there within 48 hours. So if you want to go back and listen to this information, or again, if you want to share it with a friend or a family member, be sure to subscribe to that channel and share that information, okay? So it's all about sharing. Sharing is caring. I don't like to gatekeep, so I'm here to help you guys as much as possible. Again, be sure to scan this QR code to complete your survey, and we're going to be giving away a gift card. So if you win, you'll be contacted and we'll ask you what type of gift card you'd like to receive. So thank you guys so very much for tonight. I do apologize about the technical difficulties we kind of had in the beginning. I'm glad you guys remain patient with me. Again, as business owners, things happen. Oh, okay. So imagine me not paying attention in the chat. Let's see. Looks like Serena had a question. What did you say to switch over to after Schedule C once you make over 50K? So great question. So once your business grosses more than, like if your business grosses more than 50,000, then you should already have your LLC, your EIN number, your business bank account, all of that good stuff, right? So you want to continue, you're more than likely going to be filing with that Schedule C. Now, once you make over that 50,000, then you want to speak with a tax professional about getting your business converted over to an S corporation for tax purposes. Okay. So basically, at that point, you're going to have to now file a business tax return as well as a personal tax return. So it's a Form 2553. We do assist with that. With that, you also have to set up your payroll, right? You want to start paying yourself, issuing yourself a W-2. If you have children, we can assist with getting your children on your payroll. If you have a spouse that you want to get on your payroll as well, you want to do that. So basically, when you make that conversion over, it saves you a ton in taxes, right? It saves you a ton in taxes. We're actually going to go a little bit more in depth with that on another series of Fundamental of Finances. So I can actually break it down and show you the numbers and how much money you will actually save. So I hope that answered your question. Next, can you file for it if it was a few years ago? Ms. Cook, can you let me know exactly what you were talking about? Or kind of maybe give me just a little bit more detail. I do apologize, y'all. I didn't see the questions in the chat, but if you're asking how long you have to file your taxes, the IRS has a statute of limitations. So they say, hey, if you're getting a refund, you can only file your taxes for up to you can file your taxes, but we're only going to give your money up to 3 years past the filing deadline. But if you owe us taxes, we're going to send you a letter. We're going to let you know. And we expect you to, get those taxes filed within a timely manner so that they can get their money. So I'm not sure if you were asking me about the statute of limitations for filing your taxes, but we have clients sometimes who have not filed in years, right? But again, the IRS is not going to send you a letter if they owe you money. They're only going to send you a letter if you owe them money. So the purpose of the tax code is to, what's the word I'm looking for? Leverage the tax code so that you reduce your tax liability. So I hope that answered your questions. Let me know if I can assist you any further. Again, be sure to complete that survey. Let me know what else you guys want to talk about, what else you want me to teach on. So you can actually amend your taxes, Ms. Cook. So in the event that you or your children were enrolled in an eligible educational institution in a prior tax year, you have up to 3 years to do an amendment. So if you want to amend those tax returns, we can help you get those amended, and you can potentially get up to, you know, $1,000, right? So it really just kind of depends. But yes, you can always go back and you can amend your tax returns, y'all. So if you find out like, oh goodness, I missed out on this credit, or anything like that, or hey, we forgot some information, then you most definitely can amend your taxes. All righty. Well, I think that's everything for me tonight. Thank you guys so very much. Y'all have a great night. And again, if you have any questions, or if you want to talk more with me about your specific taxation, be sure to scan this code and scroll down and schedule a free 15-minute consultation with me. And I'll be sure to get that appointment scheduled. Well, actually, my team will get that appointment scheduled. I'll give you a call and you can talk to me about whatever it is that you want regarding your tax situation, and I'll give you the best advice that I can. Y'all have a great night. Thank you guys so much for attending. Bye-bye.